What's going on, everybody? This is the blockchain backer bringing you the latest cryptocurrency news and analysis. Today, we'll be taking a look at a lot of markets. We'll start here with the Bitcoin price chart. As we all know, yesterday was a wild day in all markets, with Bitcoin falling a total of $2,200. We even saw the Dow Jones close down over 1,200 points yesterday, as Bitcoin went on a stop loss cascading adventure, which was the exact same story over here on the Dow Jones and the stock market. Higher lows, stop losses, plowed through it in 1 minute. Cascading liquidations, cascading stop losses. But throughout the evening, here into the morning now, prices seem to have settled. Seems like most of the damage was done during trading hours yesterday. And Bitcoin and crypto still were able to remain within their ranges. We had talked about this on Monday's video, that when we're in ranges like this, it's sometimes dubbed the dumb money zone, because people are trying to find trends, they're trying to find direction within an actual range, but ranges can be so chaotic that even when we're in the middle of them, I certainly don't have any edge in the middle of a range to say how the chaos is going to play out in the range. But if history is any type of indicator, if the bottom is actually in for the Bitcoin price chart, this is something similar to what we've seen happen before. And so far, it's pretty close. I'm not going to take any credit for saying that that happened because I was drawing some lines. It's just that in these ranges, things can be quite wild. But now that we've made this aggressive move down to the downside, it's time to see if some supports can start to build themselves. Technically speaking, there's nothing saying that this particular level has to be the bottom of this move, that we just move aggressively straight down, we find support, and then we're done, and we just go sideways from here. We still see there's open gaps down here to the downside, so some crawling back down to the lower sides would make sense. But in the end, holding the low that was set down there on September 6th at 18,500 would likely be ideal for Wyckoff accumulation to be the structure playing out in here. When we go look back at the bottom of the 2018 bear market and the starting of 2019, there were multiple times where there was just these big negative 13, negative 12% days. I'll flip us over to the daily time frame here to show that in a day you could see 9, 10%, and at some points throughout the day, even the entire range of the candle actually was at 13%. And then even over here as well, at one point, this one was down 11% in just a day in the accumulation range at the bottom. And the one that we had yesterday came in at 12.79%. So definitely a big move. We've seen moves like this happening in here twice now in this range of that magnitude, but something that we do actually see happen down here at these lows. And especially if we're in something along the lines of this right now, really just putting us somewhere in here. There's probably more of those scheduled to come in this range at this point, because if we are in Wyckoff accumulation, and if we are in here, it's very common to come up and exceed the height of that initial wave right in here, and then we go on into spring, and spring is incredibly aggressive and scary, and everybody believes the sky is falling, which we wouldn't even be there yet, right? We'd still just be in earlier mid phases of Wyckoff accumulation. Now, one thing that was interesting about the price action yesterday was that Bitcoin was one of the worst performers yesterday. Again, today, it's also at the bottom of the list. It's one of the worst performers today, with most of the market being green. Bitcoin slightly up, but most of the market kind of doing better than Bitcoin. And we can see that over here on the Bitcoin dominance, which was one of the reasons on Monday I was talking about kind of feeling a little bit frustrated about the middle of the range that we were in, that something didn't smell right. It wasn't time to really get too excited, that Bitcoin's price was rising. And if it was heading into a retracement, why was the Bitcoin dominance rising at the same time? That something smelled off, that a trick was up the sleeve happening in there. Boom, now we can see it. Now we see that the Bitcoin dominance has reverted back down below the lows. We're back into those 4-year lows again. And I thought that was really interesting to see such a dramatic day, not just in crypto and with Bitcoin, but in all markets. Yet the altcoin market performed better than Bitcoin did during that time period. That was interesting. That's kind of still speaking to this dominance chart, that something still is churning here with the dominance. But now it's going to be time to see if Bitcoin can kind of settle itself in over the coming days and weeks without breaking into new lows. I've presented all the cases on there on how if we took out that low, it would be a devastating moment for the Bitcoin price chart. So we'll be looking for some supports to start coming in here. But the next week is probably going to be nothing but fear headlines. So kind of get prepared for that. A lot of fear is going to be driven into the headlines right now with this action from yesterday and the CPI prints, because the Federal Reserve is scheduled to have their meeting and their rate announcements coming on September 21st, which is 1 week from today. That would be next Wednesday. So all week leading up to that, every single person is going to be an expert on the Fed. We're going to hear everybody's take on it, what they're going to do, what it means, and what will happen with markets after the Fed does what they speculate that they're going to do. Right now, the market has 100% priced in a 75 basis points rate hike and like a 50% chance of a 100 basis points rate hike. Now, like I always say, I'm not a Fed expert. I'm not going to be able to guess what the Fed is going to do. But what I do know is if they send this thing down, which is what most people want, and I think, I see it out there on Twitter. What did I see? This one right here by Wall Street Silver. Come on, showing millennials wanting to see the housing market collapse. Is that I think there's a lot of people out there who are feeling left behind by the market, and they are cheering for prices to come down. But when I look at the chart of the Dow Jones Industrial Average, it all says to me, you take out that level, there's no such thing as like a recession coming. We're talking full on deflationary depression happening if that gets taken out, because the stock market is without question a big giant bubble. And once you start losing parabolic rising and you start losing higher highs, higher lows, and treating them as support, it means that the bubble has already popped. And that below this line, I would expect to see cascading liquidations, defaults, all kinds of stuff and nasty stuff happen in that situation. And it would not be the pretty little buy the dip situation that a lot of people would be cheering for. But heading into the next week, it's to make sure we don't have something like that happen. And I've seen Cathie Wood and I've seen Elon Musk chime in over there on Twitter, where on September 11th, Cathie had posted that deflation in the pipeline heading for the PPI, CPI, PCE deflator from post-COVID peak prices, with lumber down 60%, copper down 35%, oil 35%, iron ore 60%, and so on, quoting Elon Musk saying that a major Fed rate hike risks deflation. And then overnight, someone asked Elon, he says, well, what should the Fed do? And he replied, drop 0.25%. So it'll be interesting to see what happens next week, if the market's going to overreact, and what's going to happen to this price level. Because if that price level breaks there on the Dow Jones, every example I've ever seen, that indicates the bubble has popped. If the bubble has popped for the US stock market, likely much worse for crypto at the same time. I don't know which one will happen, but if it does happen, I would expect crypto to be punished in that circumstance. And for millennials or anyone out there cheering for the housing market to collapse and for that to happen in the stock market, if that did happen, I promise you would not be able to afford a home, because things would be so bad. Even if those prices did come down on those houses, it would be just like Bitcoin. Prices go lower and lower, but everybody's terrified to buy it because they believe it's just going to keep going lower. And likely, everybody would be losing their job. So for the sake of humanity, I'd like to see that level hold, because I've shown it before. This is not your recession crash. This is not your quick little dip that gets bought up and the thing just keeps moving up higher. This is a full-blown bubble with a potential completion. I've gone through it multiple times. There's several things that, hey, you could just have a retrace before things start getting really bad, or you can go up to the 4.236 before it gets really bad, or if things could absolutely go absolutely nuts and it goes significantly higher than this. We've compared that to bubble structures before. But every circumstance says that gets taken out, the bubble is popped. Not a recession. Not a buy the dip and then we keep going situation. It is full-blown popped in that circumstance. So if we take that out, you'll see me finally becoming a Great Depression screamer. Because what's so amazing about that level for the Dow Jones as well is that's that June low, the same low that we have over here on Bitcoin. So if the stock market and if Bitcoin are going to work in unison together, what would happen in that circumstance? You'd lose the 786 Fibonacci retracement level. You'd lose the previous all-time high. And you'd lose any type of completed corrective structure that we've seen at a Bitcoin before. And like we've talked about, every time the 50-week has crossed the 100-week moving average, the bottom had already come in 10 to 14 weeks prior. And that's our circumstance of what is happening right now. Take that out. Boom. None of that matters anymore. So any new lows are just devastating for both the Dow Jones and for Bitcoin. So it'll be interesting to see this. We see Cathie Wood screaming about deflation. We see that Elon Musk is saying a Fed rate hike will trigger deflation. And Elon even thinks in the current circumstances that we're in right now, we should actually be doing a drop of 25 basis points. So that will unquestionably be the main topic of the town, especially on FinTwit, financial Twitter, YouTube, everywhere for the next week. So that's one whole week from today. And then we've got to pretty much sit back and wait until that moment to see how the markets react and what really occurs there. And does it have any impact? Is it just a narrative? We'll all find out next week. But as we know, when that time comes, volatility usually erupts when that happens. So that's until next week. That's the talk of the town. Now that that move has happened there for Bitcoin and for the stock market, 100% priced in for a 75 basis points rate hike, 50% chance of 100 basis points. But a lot of the pros out there are saying you do something like that, you're going to cause big problems. So we'll see. So as for all the wild price action that happened yesterday in both markets, the stock market and the cryptocurrency market, it was cascading liquidations, cascading stop losses on higher lows, followed by some pretty big fear that we're going to see big rate hikes that send us into deflation. However, in the cryptocurrency world, we have our own big event that's happening now. Been waiting for years. I started my channel, my YouTube channel, back in November of 2019. I remember this supposed to be happening back then before I even started my YouTube channel, but we're finally going to be having the Ethereum merge, with Ethereum switching from proof of work to proof of stake. At the time of me recording, that is in 14 hours and 38 minutes, which is somewhere around the 5 o'clock in the morning UTC time. So I think they'll be around 2 a.m. Eastern time, 1 a.m. Central, 11 p.m. Pacific Standard Time, somewhere in that range. Anyway, in the middle of the night here in the United States, there's obviously a lot of excitement and a lot of fear about this moment. I don't know what will happen during this merge. I've obviously been paying attention to Ethereum for a while on its super cycle structure. We'll see if it still remains to hold it through that time period. I do see similarities occurring in here of what happens after you come off the lows. So we'll see if that structure still remains true throughout this moment, but that's scheduled to happen tonight, the big event. On to other news with XRP and Ripple and the SEC. The Chamber of Digital Commerce chimed in on the SEC claiming that XRP is a security in the secondary market. I posted this over here on Twitter. James Filan posted this over here, showing the Chamber of Digital Commerce has filed a motion for leave to file an amicus brief. Pretty long document in here, but what do? I, of course, just sit here and hit Control, find XRP, and there we go. In the instant case, the SEC has stated that it does not typically decide whether any particular financial instrument without additional context qualifies as a security per se, declining to answer defendants' interrogatory whether the SEC considers Bitcoin and Ether to be securities. The SEC has argued that it does not claim that XRP is itself a security, but rather that XRP, even in the secondary market, is the embodiment of those facts, circumstances, promises, and expectations surrounding the digital asset and the manner in which it is offered and sold, and today represents that investment contract. This application of the investment contract analysis to digital assets, like digital assets themselves, remains novel. We are not aware of any judicial decisions to have correctly applied Howey at the time of initial sale and then reapplied Howey to later secondary transactions involving the same underlying asset. That, however, is the approach that the SEC suggests is correct. In addition to that, Jeremy Hogan posted over here, this is a huge week in crypto law. The Ripple summary judgment briefs will be filed today, although we won't see them until Monday, and a decision in the library case is expected this week. These two things will affect the entire space for years to come. So on the regulatory front, it looks like we're going to be seeing big things happening very soon here in the crypto market. So the joys of the next week are that we get a macro event when it comes to the Fed and all the talking heads talking about that. We have the Ethereum merge happening within the next 24 hours. And then it seems like we're going to have some bombshell news coming out in regards to regulatory information, at least. So buckle up. It's sure to be an interesting week. So, all right, guys, that's going to be it for this one. Markets have cooled off from yesterday's crazy action. Everything just kind of stood still here for today, including in the stock market. We'll check in on it tomorrow to see how things progress. Otherwise, things are pretty calm so far today, unlike yesterday's madness right out the gates before the markets even open. By the time the next video gets released, we'll have gone through the Ethereum merge, and we'll see what the markets have done in that circumstance. But here we go. Ethereum merge on its way. All right, guys, that's going to be it for this one. Thank you so much for watching. If you could, please like this video and give it a thumbs up. If you're new to the channel, please subscribe and hit the notification bell so you can be notified of when I create new content and when I go live. As always, this is not investment advice and I am not a financial advisor. But if you ever need a pick-me-up or a little bit of reassurance, just remember that the blockchain backers got your back. Have a good one.